Hey guys, and welcome back to another video. Today is March 25th, 2022. We're going to be taking a look at all things that happened this past week in the markets, as well as what's been going on today. Today being a little bit more boring than the previous few days, as well as taking a look at a few key leading indicators that could tell us where the price action could be going over the upcoming short term. Over the upcoming weeks or months, again, no one knows for sure what's going to happen, but we'll do our best to see what the indicators are telling us. If this is your first time watching the channel, welcome aboard. Push that subscribe button, hit that like button. As well, in my description, take a look. My Twitter, my Instagram, and my TikTok are linked down below. Check it out. Alright, so first looking at today in the heat map, a pretty boring day so far, especially with risk on assets, given what we've been going through over the past few months, especially this week. The greenest week that we've seen in a while. We'll see momentarily, but Apple marginally up, Microsoft marginally down, NVDA down 1.23% after having an excellent day yesterday, almost up 10% on the day. Google just sideways, Facebook pretty much sideways, Amazon same idea, and Tesla again, either you're up a little bit or you're down a little bit, but nothing really moving the needle. Software down on the day, financials pretty much sideways, PayPal down 2%, again that one associating with technology. The banks looking pretty green, led by Wells Fargo and Berkshire, making even new all-time highs, 52-week highs at $357 a pop. And taking a look at the more defensive risk-off types of assets, healthcare pretty much sideways, consumer defensive, same idea. Like we've seen many times this year, energy green with the rest of the market doing not so well or sideways. And this makes sense if we look at the S&P 500 on the day. We're up marginally again by 0.38%. Nasdaq, the QQQ, down marginally as well. Makes sense. And the Dow Jones, this one up again marginally. So nothing really going on too crazy. But again, if we take a look back at the heat map and look at the 1 week performance, oh, what a different story this one tells. Energy and oil still doing fantastically, but what's really sticking out, the risk on big tech FANG names. Apple up 8.37%. Microsoft up 3%, NVIDIA mainly due to yesterday up 13.66%, Google up 5%, Facebook 5.64%, Amazon 4.08%, and Tesla up 16.33%. And I wouldn't have thought it unless I just saw this right now. Aerospace and defense pretty green on the week, again with all what's going on geopolitically, and Boeing, what happened this past week in China. And not to mention DE, which is Deere & Co. They make farm and heavy construction machinery. This one also one of the more ridiculous charts that I've seen in the past couple of years. I'll show you guys in a second, but also at all-time highs. And I keep getting notifications on my phone for this one. Every day I'm getting a new notification. DE at a 52-week high. DE at a 52-week high. Day after day after day. So if we zoom out to about 6 months, you'll see what I mean. It's up 23%. Zoom out even further, let's say at the max chart. Look at that vertical parabolic just move up after the March 2020 lows. Since that point, the stock is up 220%. This, ladies and gentlemen, is the power of stocks if you pick the correct ones. But again, you have to be right, not to mention your timing and positioning. Alright, so the first chart I want to take a look at is the VIX. So this one I haven't taken a look at this week yet with you guys. However, this one has fallen off a cliff after the VIX has been swelling over the past few months. Ever since November, we've slowly gone from 15. Or I really shouldn't say slowly because we jumped up at one point to 35. And although we came back down, we were still making higher lows and higher highs on that fear index. Spiking back up just below 40, going back down. Spiking back up to 40 and then going back down. But over time, swelling and swelling and swelling and getting bigger. Usually when we get to 20 and below, it's more ideal for swing trading, but if you're above 20, 25, 30, day trading and scalping is usually the way to go because there's so much sporadic price action with the heightened volatility. And it makes sense, right? The fear has gone out of the market over the past, let's say, week since things have been going green, and then today when things are going red or pretty mixed and break even, that the volatility or the fear is still going down. Taking a look at the put-call ratio, what this means is the higher this is, the more puts that are being opened in the market versus calls, and the lower this is, the more calls that are being opened relative to puts. And I like to use this as a fear and greed kind of gauge as to what's going on in the market, what's the sentiment in the market. If there are more puts being opened, that means there's a lot more fear. And when there's either a lot of calls or a lot of puts that are being opened in the market, usually what Wall Street likes to do is not pay them out so they can keep all the money to themselves. Surprise, surprise. So for example, today if we were at 1.3, that means a lot of puts would have been open. Wall Street isn't going to want to pay it out, so what they're going to do is they're going to manipulate prices so that things start going up and those puts expire worthless. Same thing on the flip side, if more calls are being opened, that means Wall Street isn't going to want to pay them out. They're going to manipulate the price so that things go down, so they expire worthless, and then they can do whatever they want afterwards. So for the time being, we're not really at one extreme or the other. Usually when we're around, let's say 0.5, 0.6 toward this lower range, and even lower if you go to, let's say, 0.4, I'd be saying at that point, there's too much euphoria in the market. Be very wary, maybe sell calls, maybe increase your cash position if you're trading. If you're investing, just leave it, of course. On the flip side, if we were at 1.2, 1.3, 1.4, I'd be saying, you know what, maybe this would be a good time to buy because of all the fear that's in the market. All right, next up, taking a look at the 2-year yield, and look at that. Imagine this was a stock that you were holding. We would all be very happy right now if we held the stock, but no, this is the 2-year yield on the US government bonds. And ever since, let's say, the end of September, this one has just been going up and to the right, just straight up. This is mostly determined by the Federal Reserve's monetary policy and what they're saying in regards to short-term interest rates and the federal funds rate. With what's been going on with inflation, they want to temper everything down without inducing a recession. So what happens, the 2-year yield is just going straight up. What we don't want to see is a 2-year yield be higher than the 10-year yield. So this is what the market is pricing in, what they think the yields are going to be in 10 years from now. And although there's been more consolidation in the 2-year yield ever since that September point, it still has been going up and to the right into an uptrend. But the most important thing that we don't want to see again is an inversion that the 2-year yield is yielding more than the 10-year yield. So far, we are okay with the 10-year at 2.5 and the 2-year at 2.3. We still have a margin of 0.2 between both. However, that is not that much at all. It is pointing to a sick and unhealthy market. So we'll have to see how this all unfolds, but hopefully we don't get that inversion because that could mean a recession is on its way within the next 12 to 18 months. Alright, and taking a look at the FANG index, so Facebook, Apple, Amazon, Netflix, and Google. This used to be one of my favorite tickers or indices or whatever that I used to look at. However, now I'm not a fan of Facebook anymore, as well as Netflix. I've never really been a fan. I do like Amazon, I do like Apple, I do like Google, but I also like NVIDIA, Tesla, and the other one off the top of my head is Microsoft. That being said, though, I still like to look at the FANG index as a gauge for those bigger tech names. So if we zoom out and take a look at the weekly time frame, so last week we broke through that nasty downtrend since the beginning of this year in January, and this following week, this week, actually provided more strength, and that's really encouraging to see. It's looking like if we do continue finding strength, especially into next week, this area over here around 4,900, let's just say 5,000 to make things simple, is going to be acting as a dynamic resistance with both the 20 and the 50 EMA, so definitely a point of interest to be taking a look at for that one. Staying on the weekly time frame, next up the Dow Jones. This one has actually been a little bit in some kind of consolidation ever since, let's say, April of last year, so almost one full year we've kind of been trading sideways when it comes to the Dow Jones. Not my favorite indice per se, because instead of using market cap to determine weighting, they choose the price of shares. And so using a quick example, let's say Amazon was in the Dow Jones. I don't believe it is, but let's say it was. Amazon right now is above $3,000 a share, whereas Apple, which has probably $1 trillion in market cap over Amazon, is trading right now at, $170 a share. But again, looking at the technicals, we're still trading sideways. We haven't broken through. We haven't broken down. We're just in the middle of nowhere right now. You can't say the same thing, though, about the S&P 500. This one was in a very nice uptrend ever since April of last year, and then again in January, going down, breaking through. And on the weekly, it looks like we're going to be closing back above that 20 EMA. Definitely encouraging, especially considering early last week we had opened below the 50 EMA, closing right below the 20 EMA, and this week showing more strength. And taking a look at the NASDAQ, the QQQ, very similar story, but a little bit different, as we'll see right now. So we broke the downtrend, found resistance at the 50 EMA. This week we opened below it. Looks like we're going to be closing above it, but right below the 20 EMA, unlike the S&P 500, which is actually closing above the 20 EMA. So interesting to see whether we'll find more resistance, or next week if we'll have even more strength to follow up what we've already seen. And next, looking at crypto, firstly with Bitcoin. So we're still in our uptrend. This week, it looks like we're continuing that strength. It's looking positive for Bitcoin right now. We're right at those moving averages. And as I keep saying on this channel over and over and over, that $46,000 mark is the key area we need to break for Bitcoin to go higher, which I think will kickstart the rest of crypto, Ethereum, and all the altcoins to continue moving even further. We have resistance at that 46,000 mark at this area over here. We have support right next to it. Resistance and support, support and support. Next up, Ethereum, similar situation. They both want to break out. They're just not quite there yet. Again, this top blue line over here is the one that we need to break in order to continue moving higher. An area that has been acting as resistance, resistance, resistance. Apple on the weekly looking pretty nice. So we had broken this downtrend. As well as last week, we had reached that resistance of the 20 EMA, and we were right against that downtrend. So we were wondering this week, were we going to find continued strength or were we going to get faked out? We found continued strength, obviously, as we opened right on that 20 EMA, and right now we're at that resistance of around 175, 173 or so. Amazon. Now this one has been all over the place for almost a year and a half, dating back all the way to about June, July, August of 2020. To the point that we consolidated. We actually reached, I think, 3,700, went back down, tested again, and then reached lows that we haven't seen since July of 2020. So it's definitely been a wild ride for Amazon, the worst performing FANG stock over the past few years. But that's what Amazon does. If we scroll out a little bit, we see the consolidation, and then it rips on higher before consolidating again. That's what most people, including myself, are expecting for the next leg higher. Consolidate, 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 and then eventually break out. What have we been seeing recently and this week? So we had a base being formed early 2022. We had the strength like the rest of the market last week as well as this week, showing increased strength. Opening right on that 50 EMA and looking like we're going to be closing above it. Next up, taking a look at Google, much cleaner than Amazon stock, pretty much straight up over the last year and a half. And with all of the market weakness at the beginning of the year, we had a downturn, if you could call it that, but Google being one of the best businesses in the world, in my opinion. No worse for wear over the last few months. Nothing too crazy. We had formed a base at the 50 EMA on the weekly around the $2,500 mark. And like the rest of these names, showing increased strength. Opening below the 20 EMA and looking like it's going to be closing above it. Similar to Google, we have Microsoft, again going straight up for most of 2021 over the past, let's say, year and a half. The downturn, no worse for wear, creating a base around the $270 mark. Again, right below that 50 EMA, the green line on the weekly. Although we found strength this week, we're still below that 20 EMA, so not as strong as some of the other names, but not so bad, all things considered. Again, literally one of the best businesses in the entire world, a pristine company. You can't go wrong long-term with Microsoft. And you can really see the difference if you take a look at NVIDIA, which is opening and looking like it's going to be closing above the 20 EMA, versus Microsoft, which is still finding resistance at that 20 EMA. NVIDIA has been strong as it broke out this week, especially this Thursday when it was up almost 10%. So what happened? We had a massive run in 2021, the market weakness, all the macroeconomic conditions. We found a base around $200, $210. Again, finding support around that 50 EMA. And this week, not really a doji candle per se, but there are some wicks, so it looks like next week could be a better indication of where NVIDIA actually wants to go, if we're actually breaking out or if we're faking out. But really, so far so good when it comes to these names. A high quality name, and even drawing the downtrend, we see the clear break of it last week and the increased strength this week. And lastly, taking a look at my favorite, Tesla stock. So this one, as of last week, was around $760, right on that support line. At the end of the week, closing right below the 20 EMA, was going up this week to a high, I believe, of $1040, and right now hovering around the $1,000 mark. And this makes sense because of all the open calls at the $1,000 strike, as well as $1050 and $1,100, which Wall Street really doesn't want to pay out. A pretty epic battle between retail and Wall Street, but usually Wall Street ends up winning, but not always. There could be short squeezes, there could be gamma squeezes. So many options are being opened on Tesla stock. Otherwise, like the rest of the names, it found strength in a base just below the 50 EMA, going as low as I believe as $700 the day of the invasion, and then now opening and closing above that 20 EMA. This one really wouldn't surprise me if we were to retract to $900. Maybe maybe sometime next week we'll be talking about how Tesla's above 1100. We'll just have to see what happens. Otherwise, that is the end of my video. Thank you very much for watching as always. Let me know in the comments below, what are your thoughts on what's been going on in the market? Is Bitcoin going to break through that $46,000 mark? Are stocks going to continue rallying, or are we going to sell off? Is it a head fake? Let me know in the comments below. Let me know your ideas. Don't forget to subscribe, like, check out my TikTok, Instagram, and Twitter, and I'll see you in the next video.